Nvidia's market cap just hit $4 trillion. Investors wiped $100 billion off the Dow today. Headlines love these massive numbers, but here's a secret. They aren't always what they seem. If you've ever looked at your portfolio on a red day and felt a pit in your stomach, this video is for you. We're going to challenge the hype using nothing but a basket of apples and a very expensive car.
Imagine a quiet Saturday morning at a local farmer's market. Usually, prices are predictable. One farmer sells a basket of apples for $10, another for $11, and a third for $9 because they want to get home early.
If you track these sales on a chart, you'd see a wavy line. This is exactly how the stock market works. Prices aren't set in stone, they are simply the market price, the most recent price where a buyer and seller agreed to shake hands.
So, how do we decide what the entire Apple market is worth? We could use a term called market capitalization. The formula is simple. You take the most recent price recorded and multiply it by the number of units. In this case, the last basket sold by the number of baskets in the farmer's market. In this case, $11 times 1,000 baskets equals $11,000. This is the same math used for giants like Apple or Microsoft. Price of one share times the total number of shares equals the market cap. It's a quick way to measure size, but it isn't a perfect reflection of reality.
The farmer's market is humdrum until a sleek black Mercedes pulls up. Out steps a big-town lawyer who doesn't have time to haggle. He stops at Miss McNelly's stand and buys a single basket for $50. Suddenly, the latest price isn't $10 anymore, it's $50. On paper, every farmer is suddenly rich. Jim Jones, who owns 50 baskets, sees his wealth jump from $550 to $2,500 based on that one single sale. He starts picking out a new truck and planning to buy more land. The celebration lasts until the farmers realize the lawyer was a one-off. No one else in town is willing to pay $50 for an apple. When the next buyer offers $10, the market crashes. In an instant, 80% of that newfound wealth vanishes. Jim's dream truck disappears and he's back to the drudgery of $10 baskets. Even worse, Lucas, the town's librarian, was ready to invest in apples. But after seeing the wild price swings, he decides it's too risky and puts his money in the bank instead. Just as a single unusual sale can distort value at the farmer's market, isolated trades can wildly affect market capitalization in financial markets. In this analogy, Apple prices represent stock prices, and the lawyer's purchase represents a market bubble or an outlier trade that doesn't reflect the long-term reality. Why does this matter to you? Don't mistake price for value. The quality of the apples didn't change when the lawyer arrived. Similarly, a company's fundamental strength doesn't usually change just because the stock price moved 2% today. Beware of paper gains. Until you sell, those gains are just numbers on a screen. Like Jim, it's easy to feel like a genius when the market is up, but those gains aren't real until they are realized. Liquidity matters. In thinly traded stocks where few people buy and sell, one big buyer can cause wild price swings that don't reflect true worth. Okay, thanks for this. Let's go to peer review Pete for a critique of this story.
Thanks. Here is my critique of your analysis. Firstly, while the Apple story is great for spotting sensationalism, I have to point out that major indices have market makers to help keep prices steady. Secondly, the trend is your friend, and context is king. While a one-off $50 basket is an outlier, a systematic slow drop of 50 cents every week shouldn't be ignored. That could be a warning sign of a long-term downward spiral or a fundamental change in the business.
Thanks, Pete, and thank you for listening. This is only one of 30 topics in our first series on investing. I highly recommend picking up our comprehensive guide on Amazon. It consolidates the best insights into one high-level manual, complete with much more detailed explanations you won't find on this channel. Thanks for watching, and I'll see you in our next videos in this series, such as these on market crashes and bond investments.